What is flow, and how do banks use checking account money? Imagine writing a check or making a payment and wondering when the money actually leaves your account. It might seem instant, but there's a little delay that can make things tricky if you're not careful. That delay is called flow. Float is the time between when you make a payment or write a check and when the money is actually taken out of your checking account. During this period, the money appears to be in two places at once, both in your account and in the recipient's account. When you write a check, your bank records the amount and sends it to the recipient's bank. But the actual transfer of funds can take a few days. Until the check clears, the money still shows as available in your account, even though it's on its way out. This temporary overlap is what we call float. Banks use this float period to manage how money moves between accounts. They assume you have enough funds to cover your checks, so they process the transactions while the actual transfer is still happening behind the scenes. Banks also use float to handle large numbers of transactions efficiently. When you deposit money, it might take a day or two before it's fully available for withdrawal. During that time, the bank can use the float to keep the money working, like lending it out or investing it, which helps banks earn some extra income. For customers, understanding float is important because it affects how much money you think you have available. If you write a check or make a payment during the float period, you might overestimate your balance and risk overdrawing your account. For immigrants managing money in a new country, knowing about float can help avoid surprises. If you see money in your checking account, it might not be fully available yet. Making payments or writing checks without checking your actual available balance can lead to overdraft fees or bounce checks. These fees can add up quickly and hurt your banking reputation. Also, float impacts how fast you receive money from remittances or deposits. If you're expecting funds, remember they might not be ready for spending right away. Building good habits like checking your available balance often and understanding when your money clears can help you avoid mistakes. This knowledge is especially helpful when planning expenses like visa fees, sending remittances, or daily spending in a new country. Banks use float to keep the system running smoothly, but as a customer, being aware of it helps you stay in control of your finances. Remember, float is just a short delay, but knowing how it works can make managing your checking account much easier and safer.